Well, fears of foreclosure fraud and the risk of robo-signing could threaten the multi-trillion-dollar mortgage market, and that's got the attention of Senator Ted Kaufman, the chair of the Congressional Oversight Panel. He joins us now from Washington. Senator, thank you for joining us. Appreciate it.
Thanks for having me, Poppy.
Let's look at first what sort of oversight your panel has, because we think of TARP and we think of the bank bailout, but a significant part of that is the housing market, is the mortgage market. What are you looking at here in this 125-page report? Because you detail the recent allegations of robo-signing, mismanaged documents among banks across the country.
The main thing we're trying to do is, number one, as you say, the robo-signing. I mean, the fact that people were signing thousands of documents, mortgage foreclosure documents, that they didn't know what was in them is just, it kind of gets your attention. And with the three main concerns are, one is we want to make sure that every American is getting due process. Two, we want to look into the implications of financial stability. That's the main thing we're overseeing in the Treasury Department, is the financial stability, and does this have impact on our major financial institutions? And finally, Treasury has a major program, a mortgage modification program called HAMP. We want to see what the implications of this could be.
What do you think the implications could be for HAMP? Because you talk about consequences being severe. I assume you mean for the banks and their exposure. What could the impacts be also on the government's HAMP program?
Yeah, well, clearly the HAMP program is built on, lowering people's payments in order to have them survive and get themselves back on their feet. And clearly, if this causes a real problem in the housing industry, which it would, if we don't get straight who has home ownership, then clearly make the program much more difficult to administer. So that's, clearly what our concern is if it affects the housing market, it's going to affect the mortgage modification. And then who actually owns the mortgages is obviously a key question, and the role of the servicers also is involved. So these are all very, very complex questions, but it's based on one thing which you raised right from the beginning, and that is how extensive is this, and we're still in the process of doing that. But we say Treasuries and the government and the local government and the attorneys general are all on the right track to get on top of this as soon as they can.
Well, your concern is that some of the biggest banks in this country that are in still really dire straits might have to buy back some of their mortgages in the $7.6 trillion RMBS market. What banks are you most concerned about right now?
Well, there's the biggest one right now. That's not the biggest in terms of time, but what has your concern is the New York Fed, and also PIMCO is asking for putbacks of $49 billion from Bank of America. So this is a serious problem. If there are putbacks, this also is a major concern we have in terms of what the impact would be on the financial institutions and therefore on the economy.
Can you explain what putbacks would mean? What this PIMCO and Bank of America move could mean?
Well, what it could mean is that Bank of America could be out $49 billion. I think their capital is, I think, over $230 billion or something like that. $49 billion is a big chunk. And it's just an indication of what other things could happen. Now, I'm not saying anything's going to happen on any of this. I'm just saying it's cause for concern, and we're calling for Treasury to monitor it. We're also calling for them to do stress tests on the financial institutions, take into account these different scenarios. Look at Fannie Mae and Freddie Mac, see what's going on with them. We've got to have better faith in the housing market, maintain faith in the housing market, and finally, as I've said all along, we're going to make sure Americans get due process and they're being treated fairly. So that's what we're calling on Treasury to do.
Your concerns also, you say in here, may be overblown. The concerns across the country may be overstated. What causes you to say that in this report?
Well, the financial institutions basically are saying that's the case. The financial institution is saying this is really no problem. They had a moratorium. Some of them had a moratorium for a while. They called off the moratorium. They feel that this is well manageable.
You mean they're saying that that publicly because you haven't had discussions?
Yeah, they're saying publicly.
No.
They're saying that publicly. They're saying financially that they think they're okay on this. They think they've got it pretty well covered. Public statements from the CEOs of Bank of America and others say that they've got it under control. And we're just saying, look, our oversight panel's job and Treasury's job is to oversee this. I mean, people told us, people can say things are under control. We've got to drill down and find out actually what's going on. And those are the things we recommend in terms of the stress test and the oversight of Fannie and Freddie and the rest of it.